So I just received an email from somebody who watches my YouTube channel, and I want to read that to you. I don't think I should use her full name, but it's Catherine W. I was watching your stocks of 2024 predictions video that you made in January of this year, and at first I thought you got lucky, but it looks like nearly every stock that you discussed has gone up except for Tesla. So congratulations on that. Would you mind making a video that goes more into how you chose these stocks? Thanks. I love your videos. Nothing like a great email to butter me up, Catherine. So let me take a shot at this, because what I have to do is I'm going to go back and kind of give you the, I have a video that's out there, but I kind of want to show you how it looked back then and why I saw what I saw on the chart. So let's take a look at it. Let's start over here on the left side of the screen, and we'll look at earnings. That's like the first thing that I look at. Catherine and anybody else that's watching. And this is my process. So I start over on a fundamental side. 80% of a stock's analysis is fundamental before you get into it, and 20% is technical, the chart. And then after you get into it, it's reversed. It's 20% fundamental and 80% technical. So I'm looking at their earnings, and I'm going back to 2018, and I see 89 cents, then a jump of almost triple to 251. 2020, 277, 248 in 2021, and then 565, and then a double again, 2023 to 1181. And now they're looking in 2024 to double again to 2170. I mean, this is, if you look at these blue numbers on the right side, they're triple and double digits. Pretty good stuff, right? So a company will perform as long as its earnings are performing, because people want to buy growing forward earnings. At least I do. And so we're looking at earnings there. And then, so that's what I saw on that particular part of the sheet. Then I also, you could see the quarter over quarter. There's triple and double digits here at the bottom of the screen. I also looked at sales, right? So you could see quarter over quarter sales went from $1.3 billion to 1.6 to 1.8. This quarter over quarter numbers, there's one that went down 5% quarter over quarter, but by and large, those are pretty big numbers. So right out of the gate, I like those already. It has a 47% earnings per share growth rate, and that's a kind of a calculated formula over 3 years. But generally, I like more than 20, 25%, something like that. Return on equity of 40%. That's how well the company is handling your money. So I like a good, return on equity. 40% is at least double what I like. So that's really good. They have very little debt, 6% debt. So this company is not going to get itself into debt problems. And so there's a lot of good things to like on the fundamental side. Like I said, it's a lot of blue, right? Only a little teeny weeny bit of red. So I like a lot of blue. And this is Super Microcomputer, by the way. And so we'll look at Super Microcomputer. And I said back in the video that this is a coiled spring. The longer this goes, and this is a weekly chart, the longer this little consolidation goes back and forth and up and down and doesn't break out, the more power it has on a breakout. So I like some, usually if you get a 5-week consolidation, the breakout's not as powerful. But this consolidation basically lets all the old sellers who are impatient get out, and it provides new buyers to come in and propel the stock higher. So what I saw was that coil was getting ready for this stock to break out. And sure enough, it did. It broke out basically on the week right after I made the video on the 12th of January. And you can see it went from, the breakout point was 357, and it ran from 357 all the way to 1200 in just a matter of a few weeks. So this has now become what I call a super stock, because you get that kind of growth. I mean, you could see that it tripled in just a few weeks. That's the kind of stock that you want to hang on to for a long time. Now, I did come out and say, look, take some of your money off the table. I think it was like 720 when I said that, because it would be foolish for this thing to go all the way back down to to $400 and you give up most of your profit. That would be silly. But at the same time, I also did NVidia. So let's look at NVidia real quick. And NVidia is very similar. So let's start over here on the left side. You can see all of those blue numbers, a lot of growth, triple digit, 288 for this year, and then 81 and 20. So very similar numbers. And then we have earnings per share growth rate of 45% and 99%. By the way, some of these numbers might have changed in the last month or so, but I'm just trying to go back and give you a look back. Basically, but essentially the numbers are not that different. So a return on equity of 99% with very little debt, that's really good. And let's take a look down here. Look at these triple digit numbers. Yes, in 2022 they lost some money, probably because they were putting a lot of money back into R&D, and they weren't growing that fast. And all of a sudden, this AI thing exploded, and that's the same thing that's happening in SMCI, and it went up. Look at these triple-digit sales increases. So they're selling chips like crazy, right? This is a super stock. So let's go over to the right and we'll look at the chart. Now I love the double bottom pattern. It's like one of my favorite patterns. So here's a double bottom, and here is a small consolidation. It's called a flat base. Just a few weeks with a very shallow base. And when you add these two bases up, right, it looks like the other one that I just talked about, doesn't it? Like it's coiling for several months in this period. And then when it broke out here on the 12th, the same period of time, and it did very similar things. So it broke out from about 505, and it almost went up to 1,000 as we sit here today. Now I did say take a little bit of profit off the table here as well, because you don't want to give up that profit. So those are two stocks that I talked about, and I hope that's the kind of analysis that I do on every stock. Is I spend time looking at the fundamentals and the technicals. I'll do one more. I know I'm going a little bit long here, but one of the other ones that I talked about was EDU. And you could see EDU has a lot of blue numbers. 2022 is really lousy, right? They lost $6.17, but you could see, the company has really taken it in the shorts because they lost so much money. And now they're kind of coming back up on the other side. But you can see triple digit 124, and then growing at 80% for 2024, and then 37. So it's looking like it's righted the ship, but all these numbers are now screwed up. But nonetheless, the chart looks really good. But if you look at the bottom here, look at these earnings per share number, quarter over quarter numbers, all double or triple digit. And then most recently, they're all double digits here. So it's doing the things that I like to see it do. There's a few numbers that I don't like, but that's probably why the stock hasn't taken off like the other two I just showed you. However, it did break out, and it broke out, it broke out finally on the week of the 9th of February. So this one took a little bit longer to kind of come to fruition, but I think I was talking about it before it actually did the breakout. I think I made the video on the 6th of January or the 3rd of January, something like that. And that was at 74.22. So now the stock's at 92.72, so it's up 20%. So I like breakouts. I don't like trying to find the catch the falling knife as these things are falling. So if you look at this on the left side of the chart, that was falling, right? You don't know how far it's going to fall and how long. And it's hard to stay in a stock. Now, sometimes you have a long-term plan and you know that it's the right stock, and so you stay in it. And if you'd stayed in it from the top, you'd be almost back to even. But it took a couple of years. That's the unfortunate part of being in the right stock at the wrong time. So you've got to kind of have all the things working in your favor. You got to have fundamentals and technicals. So you've got to figure out with those two things if it's the right stock. There's a lot of other things involved too, like do you like their products and do you like their management? And then are you in the right market? Well, we're in a bull market now, so that's a good thing. Was it the right spot on the chart? And that's why I made that video, because they were kind of close to the right spot on the chart. They were near breakouts. I like breakouts. And then did you catch it right? And do you have good risk management after you get into it? Those things are all really important. So, Catherine, thanks for your email. I hope I was able to answer your question. By the way, anybody else, if you want to leave comments in the comment section below, if you like the video, give me a thumbs up. If you don't like the video, give me a thumbs down, but tell me why you didn't like it so I can improve. I had somebody tell me they didn't like my music in the last video that I made a couple weeks ago. So I'm not even putting music on this one. But anyway, that's the impetus and the thinking behind those three stocks. I hope that was helpful. Bye.